The January inauguration top was predicted by a lot of people, not just me. You had this Trump meme coin launch, the Melania one. I was incredibly bearish when that happened.
Yeah.
And it's just like the only people that were bullish were like the young kids.
So memes are dead, alts are dead. What's left? Before we started, you were talking about the stock market. You thought stocks were also dead. So are we all going back to buying gold and bricks? Is that
Well, unfortunately, yeah, people are not going to be feeling very like risk positive. I think for the next 1-2 years is kind of what it feels like.
Hey everyone, I'm really happy today to be talking with Jordi Alexander, who's CEO at Selini Capital and also host of the Steady Lads podcast, which is like a really great podcast. I try to listen to it as much as I can. And today we're going to be talking about what's going on in the markets right now and kind of taking a step back and looking at the sort of macro situation from a global macro perspective, but also from sort of a macro crypto perspective. Hey Jordi, thanks for joining me.
Yeah, no, good to chat. It's we were just saying like how there's no quiet week in crypto or in the markets in general.
Yeah, I wanted to talk a little bit about your background and like a lot of folks who know you and who follow you and like listen to your podcast will know that you used to play poker. In my like 12 years in crypto, it feels like I've met like a disproportionate amount of ex-poker players. Is there something in crypto that you think like particularly attracts people who gamble or who, think strategically like poker players, or is it just a coincidence?
In this stage of crypto, we're still in the casino phase where there's just like a bunch of people speculating and trying to outsmart each other. So yeah, we saw what just happened with Base today. They're trying to tokenize content, tokenize everything, and they're like this is an environment that's still, I would say, very conducive for people who can just like think from an EV perspective about expected value.
How did you transition into crypto, and like when did you start becoming interested and seeing that there was like something interesting here for you to like sink your teeth into?
I mean, I had between poker and crypto, I had like a 10-year TradFi stint. So during that time, learning about currencies and about rates and commodities. I was a fake trader mainly, and I would say like hearing about Bitcoin in 2013, I was like, oh, this is too small. It's not going to get any kind of like network effect. But then in 2016, it came back and you know bought first Bitcoins then, and like 2020 was the time that I just went 100% deep as first as a monetary system, an alternative monetary system, and something that can be useful for just like human organization in general, because everything, once you think from first principles and break things down, it only comes down to just society organizing itself and like people being able to create incentives and do like good work and kind of put the incentives in the right place. That's all anything is. So when you look at it from that perspective, there's some building blocks in crypto that are better than anything else.
Yeah, I mean, I think like a lot of us who've been in the space for a while, like look at blockchains as just massive coordination mechanisms with economics kind of built in. And, certainly Bitcoin is like the most, the simplest example of that. It's like a very simple example of a global coordination mechanism that incentivizes people to coordinate and act like in the interest of the thing. And that's been kind of stretched out. And there's been lots of other experiments since then, of course, like, like all of DeFi is kind of like based on this idea. Do you still look at all those things from a first principles perspective to decide or determine whether or not they're like useful, investable, have long-term value?
Yeah, I mean, I guess my mental framework is there's there's the bed, and it has two pieces. It has like the base, and then there's the mattress. And the mattress is like the speculation. It's sort of like the hype, and it's like maybe out of mantra $6, maybe it's like the big part up on top, and then you have some base, like the wood, the harder part, and both of them together determine the price because it's like the sum of the two. And uh, as an investor longer term, you have to think about the base, like how solid is that? How big is really like the fundamental aspect? And then for short term narrative, meme coin trading or whatever it is, you just focus on the mattress, and that's fine. So the two things stack up in a few examples, maybe like Ethereum, Solana. Um, and then in other ones, it's like mostly one or the other that you're dealing with, and just know like know what part of the bed you're dealing with.
Yeah, yeah, and sometimes the bed gets termites, and
Oh yeah,
even the legs get eaten up, or like sometimes just someone throws a mattress on the floor, and there's like absolutely no base, and
yeah,
yeah, or maybe just some thick blanket.
yeah, yeah. I mean, a lot of people just sleep on the floor, and just try to put some blankets up. But
Yeah.
if you wait long enough, at some point the fluffy part starts to dissolve, and it's just a matter of time.
Yeah. You were talking before we started recording how you feel like things are playing out in reverse. I take it from that you had like a pretty accurate prediction of like where things would go. Um, can you elaborate on that? Like, what was your sentiment, say, like 6 months ago or like a year ago? How do you trace back from that? How you feel the markets are now and like the ecosystem as a whole?
I mean, broadly speaking, I think we all went into the election and kind of knew that one outcome was good for crypto, one was not, because they were very clear about this. So we got the good one, and then we just ran up. It was a question of how far, how hard, how would it go, and the January inauguration top was predicted by a lot of people, not just me, and ended up being basically exactly spot on. You had this Trump meme coin launch, the Melania one. I was incredibly bearish when that happened.
Yeah.
It's just like the only people that were bullish were like the young kids, because they just haven't seen enough market forces, enough market cycles to understand that you're at the point where it's like the sugar high, and it's gonna come down.
Yeah.
Um, and the disappointing thing is like how far we've come down, where this expectation that we would get institutions coming in full force and like a lot of like new money. Some of it's come in, it's gone to Bitcoin. I think that's pretty obvious as like a geopolitical asset. It might get even more. I'm quite bullish on Bitcoin, or very bullish in a medium term sense. But um, I think there's still a crisis on the smart contract side. We've had like our AI cycle. It has been surprising like how quickly that AI
Forgot
cycle.
about the AI cycle. It happens so quick, man. It was a blip.
It was kind of shocking, like some of these, Cerebro type of charts where you create $1 billion asset that, just completely flat, just dies. Things are coming more efficient. Like market is like rewarding the right decisions quicker than it used to. We don't have to wait, years. Um, but still optimistic on pockets of things for sure. And yeah, I mean, last thing, of course, like we're seeing that some of the unsustainable looking valuations where you have something trading at 10 billion and there's nothing there. There's like no product. um, it's more of a token game, and like playing with floats and stuff like this. And yeah, like at some point, like people get too greedy anyway. It seems like.
Yeah, what pockets of things are you interested in? Do you think like you still have faith in?
I mean, the two obvious ones. One is still AI. I think the AI and crypto combination just makes fundamental sense. It's not speculation. It's just a matter of time before the really strong, traditional AI people and companies find more and more collaborations and things they can do with crypto, whether it's like for agents to be able to transact, um, whether it's for the actual models themselves or for the privacy aspect. There's for the training aspect. There's a lot of elements that I think will get increasingly exciting, more than what we had, which was more of like a meme coin AI agent launch pool, launch pad thing, which, uh, has not turned out to be very sustainable. And then the other one, of course, is like the more traditional finance aspect, where the traditional finance system gets more involved. So you have stable coins, you have things like they're talking about real world assets. Obviously, we have treasuries already. We might get other things that make sense. Banking, just kind of like integrating the fiat world with the crypto world. And I actually think like, CBDCs might make a comeback. Like we'll start seeing more digital crypto-ness of the traditional financial ecosystem. So those are the two.
Yeah, I think that overlaps with the way I see things as well. Like, I mean, AI, I think, is still a ways away from being, codified as like a real use case with actual kind of like usage and value. Like a lot of AI, I mean, most of AI is still captured by, sort of traditional tech companies. There's hope in me that like AI will move more towards the types of like decentralized technologies that ensure privacy, data, sovereignty, etc. Things like messaging apps, right, where people just really don't care so much about privacy and they don't really care so much about like using Signal over WhatsApp, right? Even though all of us sort of, in the that are attuned to these things, feel that that's important and like evangelize. But I think like the masses really just want like, I don't know, AI generated cat videos, and they don't really care if the data is being farmed or whatever. So I think that one is like harder to get to.
I don't, I don't,
Um,
I don't disagree on the masses, but I think there's, even if it's like 5 to 10% of the population that is willing to pay premium to have, like a private digital twin that they can
yeah,
tell stuff to, that they know is, verifiably secure, and they can express, their, private details to like an AI, and it's kept, private, and they really have like a strong representative of
yeah,
themselves. Like stuff like this, I think people will pay premium, and it'll still be a big business.
yeah. How likely do you think that a new market entrant is the one who kind of breaks out with that sort of solution, or a company like Apple, for example, adopting this technology in their own AI products?
I don't think it's going to be a company like Apple or Google directly, but I think those companies might collaborate with. I mean, we're starting to see like some of the crypto startups that are taking direct investment. I've invested personally, and I've invested along with, like some of the public ones. You saw like Prime Intellect with Andre Karpathy. There's other ones where it's some of the other, obviously Sam Altman has involvement in crypto, and, um, some of the other, Anthropic, some of the other Google, these guys are also doing stuff. So yeah, I don't think it has to be the big companies themselves, but it'll just be like somebody who actually makes a product that uses the technology in a way that makes sense.
Yeah, I mean, like that's the dream, right? Like the dream is that we all have our own digital twins that are private, where we own the data, where there's the kind of risks that a lot of folks are fearful about AI, don't come to fruition.
What's
Yeah,
that?
like
I don't think we're far, to be honest. Like if we talk next year, there'll be a lot of movement.
yeah, okay. Well, let's we should already plan to talk next year, see if if this played out or not. Um, yeah, I mean, so like just coming back to the kind of like Trump top. Practically speaking, we've never had a more pro crypto U.S. administration. And fear in the market right now is like super high. The markets, the prices have come down significantly, valuations have come down significantly. There's something about this situation that just feels unright. Like you have these very bullish signals on one side and like the market reacting in a totally different way. Is it just that this was all priced in before Trump came into office, or are there other things at play that are causing the markets to be so bearish right now?
Definitely, some of it got priced in pretty hard. Yeah, I mean, the way we ran up with no dips, November, December was kind of crazy, and especially like a lot of these alts that caught bids with, a lot of dead projects. Like there was just like so much inefficiency of capital moving around that it had to deflate. The teams woke up from their 4-year slumber, and suddenly, like I won't mention. I don't need to poke specific, large cap projects, but a lot of these dead projects kind of suddenly like 5x'd and started selling their treasuries back. So like that was not gonna ever get anywhere. There's only like limited dollars in the system, regardless of anything else. The economy is kind of in a we might see a recession that could be like, deeper than the COVID recession, because it's less of like something you can point to as a single thing of like, oh, we just got shut down, and as soon as we open up, people will be optimistic again.
Yeah.
Once you start getting pessimism seeping in and fear seeping in, like the things you're talking about,
Mhm.
you don't get out easily. I mean, it's a couple of years of working through it. And the really bad part right now is, for whatever reason, like the strategy that they've taken is like very high in uncertainty. Like
Yeah.
nobody knows if they should invest, if they should, like, how much do you hire? What, do you open offices? Do you, like, who knows? It doesn't know. So everyone's pausing. Um, and the more it's like a reinforcing cycle where we just deflate. And then the other thing that I'm noticing, especially, I live in Asia, I'm here in Singapore. Certainly, the role of the US dollar as, like, the de facto baseline of everything is getting questioned more and more. And we're seeing gold just completely crush it. I mean, I posted on Twitter yesterday. I was like, who is the market maker of this XAUT token, which is like the Tether Gold? It's just going up not nonstop. So that says something. I don't think we should ignore what gold is saying. It's a huge asset, and the fact that it's moving like this, it just means people are globally, I think, diversifying out of dollars. So we're just in such a tricky market to navigate, um, and it's probably causing people um, a lot of fear. Plus, they've taken a huge drawdown. I mean, everyone in crypto probably has some Ethereum or Solana, uh, one of those two, right? Like everyone has one of those two, I would say at this point. So we've all taken an L to a certain extent.
Yeah. Yeah. Well, I wanted to talk about ETH a little bit. So in 2022, you wrote this article on Bankless that argued that the ETH merge was overhyped. And certainly we all remember the merge and how everyone was excited, and it was going to like accrue more value to Ethereum and make it a deflationary asset, and um ultrasound money and like all this stuff. If you were holding ETH a year ago, you'd be down by about, I don't know, what's the price of ETH today? Like 1,800, I
That's not
think.
it's just bad. I mean, I saw it like on a 8-year horizon were flat or something. So like it's not great.
Yeah. So like, what's your feeling about ETH right now? Are you still holding ETH?
Still holding it. I mean, I might hold it to zero. It's fine. One of those things I've held it for so long that
Yeah.
um look, I mean, it's clearly going in the wrong direction. The things that I was mentioning in that article, everybody was like so bullish, and it was the reality ended up being worse than even my contrarian bearish take. It was worse than that because L2s were even worse than I thought in terms of like
Maybe you can just recap the kind of TLDR of like what your position was in that article.
yeah, I mean, historically, this ultrasound money thing didn't really sit right with me. It didn't make a lot of sense that you can just, decide, make a sound money and ultrasound money, like this kind of thing. Didn't really make it a macro asset. There was like this clear conflict I could see, one on the revenue side, where you're either having L2s do stuff or you're actually getting revenue. And if you're not getting revenue, then your only like use cases as money is is like the network effect. Over the years, I've started calling it community money because it's not base money or ultrasound money, but it's community money. And what that means is you have a lot of people, and it's just like NFT collections. Like if there's a lot of people and like there's a strong community, then the value is very high. As soon as the community starts to get splintered away and then like lose attention, lose faith, and the community money, which is like the value of just the Pokemon Go cards or whatever we're talking about, the community money goes down. And Ethereum, unfortunately, like has the community that started at a very high point and felt, that there was a pristineness to it. I think the Solana cycle showed what you said previously, that for the masses, they don't care about pristine asset. They just care about like, what can I gamble, try to make money. Like they just want they just want their dopamine receptors to be, hit pretty hard.
Yeah.
And
That's another first principle. Dopamine. d- People will seek dopamine hits. Yeah.
oh yeah, I mean, that's unfortunately our monkey side coming out. And when you look at what happened this cycle, it was clearly like the meme coin cycle. Like there's no other way to describe the cycle.
Yeah.
Um, it was pretty obvious that the thing that is still driving most of the value is the speculation and like the ease of use and the quick, the dopamine hits, not like sitting on MetaMask and clicking like, confirm, yes, this asset, let me do like 20 ETH and this. And it's just people want to just gamble. That said, look, like the only really bull cases for Ethereum are related to what we said before. Like one is the real world asset thing. I think having the most neutral smart contract platform is by default the place that a very large potential tokenization would happen, and that remains true. So that thesis is kind of what's holding me as a believer.
Yeah. What surprised you the most since you wrote that article, and like in terms of how like the ETH price has gone, or in terms of like how the ecosystem of rollups has built out,
I,
or L2s rather.
I mean, the L2 thing, we all kind of thought from first principles back when we had just Arbitrum and Optimism, and then we started thinking, okay, what if there's like thousands of these, like they're telling us? Like, do we need thousands of them? Like, I can't be in 1,000 cities at the same time. Like, we just want like a few
Yeah.
good cities. Um, yeah, I remember like Manta, like some of these like L2s, they would do this playbook where they just go to Binance, they do a launch pool, they do some points campaign, and then, um, yeah, a lot of this stuff just didn't surprise me. I think the thing that surprised me was maybe like this base aspect where like now people are saying like base is Ethereum and and basically like it's a strange there's strange bedfellows between Ethereum and base right now. Um, that's definitely surprised me. I don't know if you expected anything like that to happen.
I didn't expect for base to become so huge. I think I expected Ethereum to like really remain dominant in DeFi, and like all these L2s would be more of the speculative ones. And I felt like DeFi was um the use case that was more rooted in first principles, and that people would like more flock to first principles. But in reality, like, people want to speculate and they want to gamble, and like,
I think like the leadership of Ethereum also is just has been. I would grade them as like a D minus for the last
yeah,
few years. It's if they understood the game, at least they would be able to make some strategic decisions. But they didn't really seem to get it or understand what DeFi, like what's happening. In my opinion, if they looked at like Ethereum as being the NBA commission, and then you have all these different teams as L2s, that would have worked because you kind of you 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 just showcase them, but you kind of create like a structure where it all makes sense because they're all part of this organization. And
yeah.
then instead you just have yeah, I've called it like the European disease, where you just have like this OG aspect. There's a lot of old wealth, and just kind of gets lazy and socialism, and that not like really like looking at the capitalistic case enough.
Yeah, like, I don't have a really good sense of this because I'm not like super plugged in with the, I guess, the Ethereum leadership team. But like looking back, and if you look at the Ethereum leadership team and the Solana leadership team, there's a real difference in terms of really capturing this capitalistic aspect and being like, trying to build a business out of this, and building something that um it feels more like a business and less like a public goods project. And like, if you look at Ethereum, it's definitely the latter, right? Like, it definitely feels more beta than something like Solana, where everyone is just like gung ho and like highly capitalistic and efficient, where Ethereum, and, like, Ethereum has some of its roots, I guess, in some of the idealistic, I
Right.
think, kind of place, right? Where like Solana always wanted to be kind of like the biggest and the best, and there is a little bit of I guess maybe like US versus Europe personified here to some extent.
Yeah,
Um,
absolutely. But like even Solana, like has things to deal with because the token is still community money. It doesn't change. It's still community money.
sure.
Community like is happy when things are going well, and then there's like a big reflexivity when the community is just been getting wrecked on a bunch of like random coins. Um, there's like a huge unlock that just happened. Thankfully, it's behind us. Yeah, I was kind of warning on these like multi-billion unlocks on Solana, and it's obviously just had an impact. It's traded so heavily for the last few months. Um, but yeah, let's see. I mean, Ethereum does have like a strong mattress board underneath, I think, with the neutrality and like just there's a lot of infrastructure that's been that's been built around it.
Do you think this new leadership team is going to move the needle in any meaningful direction, or does something else need to happen kind of structurally for to the token, to the chain, and the
Uh,
way it interacts with
yeah,
LPs?
and we need something pretty big. I think it'll happen potentially from like a BlackRock, that type of thing. They'll just get involved and issue some stuff and say, okay, like this is where we're gonna like a like a friendly takeover. We're gonna use this as our base for like this big digital strategy, something like that. I mean that's what it's there for. I think people were thinking maybe like the AI use case because of the neutrality there, but I actually think that most of the AI crypto activity will probably happen on like purpose-built chains or
Yeah.
at least infrastructure. So I think the RWA Wall Street getting like a big BlackRock type of institution, that's kind of what it's going to take.
When you say like purpose-built infrastructure, you're talking about app chains, basically, kind of purpose-built chains.
Well, AI, like we've seen a lot of attempts already at building, chains that are, working well with some of these components that crypto AI uses, like these like secure enclaves or
Yeah.
just like privacy aspects where you can uh, be less transparent than on a public blockchain.
Right. Yeah. Yeah, definitely. Like if you're building anything that needs to use like TEs and stuff like that, you want to use build your own chain. Earlier you're talking about stable coins and like kind of transforming the traditional kind of existing banking system. The way I think about that is I think stable coins really accelerate these kinds of use cases, right? Like stable coins will, I think, transform fintechs, like, traditional finance or fintech products. So we'll get like better online banks, we'll get better settlement, quicker settlement, faster and cheaper global settlement as well. Companies like TransferWise, might, suffer from like new entrants coming in using stable coins for international settlements.
I mean, Revolut has, always been a competitor to TransferWise, and
Yeah,
they've grown massively. And I think they're embracing crypto quite a lot. I think
yeah,
a company like Robinhood is incredibly crypto curious, progressive. Not curious at this point. I mean, they're all in bed.
yeah,
So yeah, there's definitely like a progress of fintech towards more crypto adoption. I think that's
yeah.
going to continue.
At the same time, also institutions have adopted Bitcoin, through ETFs and through holding Bitcoin and kind of seeing Bitcoin as this kind of pristine asset, like you were talking about earlier. Whereas DeFi, the project of DeFi has been to build this new infrastructure for finance, and to a large extent that hasn't happened. And I think alts, like the current kind of dump on alts, represents the rejection of institutions. So institutions have adopted, like stablecoins, RWAs, Bitcoin, but they've rejected DeFi up until now. And I'm wondering if, is it a fundamental thing where institutions cannot adopt DeFi, or it'll be very difficult for institutions to adopt DeFi in its current form because DeFi fundamentally is a political project that aims to replace, that institutional infrastructure. Like, Ethereum comes from this very kind of cypherpunky, libertarian place where the initial goal was to build like the new kind of internet infrastructure for finance, And institutions adopting that kind of goes against their own interests. Like institutions want to preserve their infrastructure. They want to
I don't think
preserve
that's an
money.
issue because like they're all competing against each other. And so if there's something that Goldman Sachs can make money on in crypto that the others can't, they'll go for it. Like just the competition that exists because it's a very competitive market, right? Even the legacy firms are not going to strategize together and be like, oh, none of us are going to go try to
Yeah.
grab the cherry. Like they'll go for it if it's there. So I think it's more displaying that it's just there hasn't been enough meat on the bone yet. We saw the Ethereum ETF, not terrible, but not a huge success either. They're saying, look, if we can package it up with yield and then it's like a yield product, then maybe we can sell it. So I don't think it's that they rejected it. I think it's just maybe they need to get the right, story and format so they can sell it properly.
Adopting the infrastructure, I think, will take a much longer time if it happens at all. And I think that here we're going to see a lot of consolidation. I feel like, there will be a handful of winners if institutions adopt, this infrastructure. Only a handful of winners will be a part of that. Those that have like good institutional relations that like actively work towards building infrastructure that can fit within the institutional frameworks, regulatory frameworks, etc. And the rest are probably not going to amount
Yeah.
to much, and will continue in this sort of speculative bubble.
Yeah, of course. I mean, the good thing is we have seen this cycle, a couple coins like Hyperliquid, for example, that are just making a ton of revenue. There's hope on the app layer, I would say, and um, the infrastructure layer, like all these like L1s, L2s, that the only way that they would ever have value is if like a lot of talented people spend their time building stuff on top of them and kind of letting the underlying base accrue that value. But um, the game theory kind of played out, and the most talented, app founders just want to capture the value themselves. They don't want to, put it on someone else's base and put it on their plate. So
Yeah.
um, we're definitely living in more of an app direction. That's for sure.
Yeah, I was talking to Josh from Astria the other day, and he said something here on the podcast, and he said something which was I thought was really interesting. Is fragmentation isn't a technical problem; it's an economic problem, and liquidity costs money, and like if you're building an app and you brought that liquidity there, and that liquidity has costed you money, there's no reason why that liquidity should go anywhere else, and you're going to continue to protect that liquidity. And as we're going into this more kind of like app-centric vision for the future, the kind of like Cosmos, app chain philosophy, I wonder how that's going to play out from a liquidity perspective and how we're going to solve this fragmentation problem. And I think it happens through consolidation and just like a lot fewer actors that are able to actually have app chains. Yep, like we've seen that in Cosmos and sort of like, the app chain world for the last 2 years, where a lot of chains have gone to zero and only the big ones remain. And up until even just this week, even the big ones are starting to fall. So, yeah. Any thoughts on the mantra episode, as a market maker?
I mean, we never market make it. We never invested. Didn't really do anything. Never really interacted with it. So I guess I can look from the outside, and um, you have something that went up like 100x over a couple years without a functioning product, and then it was like a top 25 coin, at least like iconically. Like you never really know what the real market cap is, but like theoretically, based on what they reported, it was like a top 25 coin.
Yeah.
Um, I think everyone knew it was overvalued. The founder was saying it was overvalued. Like everyone kind of understood that game, but there was just like a token game going on of like squeezing the shorts and like trying to keep the momentum going. Um, but even if the asset on paper is $13 billion, if you rip 100 million into the bid, like, is there anyone really going to absorb it? And we've seen this time and time again, like I wrote about Olympus back in the day where it was similarly like trading at some kind of billion valuation, and didn't mean that it could really sustain sell pressure of like 1% of it, or like, maybe a few percent. So
Wasn't their token also Ohm token? Wasn't it also
yeah, that one has an
a ticker?
yeah, similar. Yeah, they've stabilized it, but it's stabilized at like $20, instead of 1,000 where it was. This one, um, there was just this air pocket below. And look, I think the exchanges are probably still unsophisticated when it comes to like protecting users from this stuff. They don't really know or understand it well enough to, I mean, they do their investigations and they try to look at the float and they try to like understand what's happening, but clearly not well enough. And I think they're still learning a lot. They have to learn a lot more. Um, I saw Star from OKX said that this is like a big scandal for the industry. And certainly, like, we're going back to these like bad headlines and these safe moon kind of days.
Mm.
Yeah, we'll see how it sort of plays out, but I don't think that we go back up to whatever 10 billion
Yeah.
on this token.
Do you think that as an industry, like, we need to start reporting, we need to demand from projects that they're reporting their actual market cap and like removing, like lock to so like tokens held by the foundation from the float. Um so that, yeah, CoinGecko and CoinMarketCap are reporting more accurate FDVs.
I mean, we definitely do, but like, there's always people going to get around it. I mean, you always see this, like, oh, there's an airdrop. Oh, it's a 10% airdrop, but then 9.9 it like belongs to the friends. So like, it's not them, it's their friends. Okay, like who is it? Not is it not float? Like it is. So you just
Yeah.
kind of get around this stuff. I don't think that's really the solution. Um, certainly,
Regulation.
like, sorry.
Regulation.
Um, I actually like. I don't know if regulation can do enough because it's not a national thing. It's an international product. I've always like thought that the exchanges, like the big exchanges, Binance, for example, we have seen Binance get more aggressive. They've been just generally intervening when they see something obvious. I would say this one was maybe a tricky one.
Yeah.
But these things are not old. Like if you look at why traditional markets have derivatives regulators separate from, you have the CFTC, you have the SEC. Um, you just need like someone who's like an expert at understanding derivatives, for example. Like the perpetual product, I've talked about this a bunch, is not like a bulletproof product. Like it's fun, it's like good, it's good UX, but the underlying fundamental of the perpetual is also not solid and relies on a functioning spot market that is like a healthy spot market. If you don't have a healthy spot market, then you get all kinds of crazy stuff going on. And I think that's part of what we saw here.
Hmm. So memes are dead, alts are dead. What's left? You were talking, or before we started, you were talking about the stock market. Thought stocks were also dead. So are we all going back to buying gold and bricks? Is that
Well, unfortunately, yeah, like when you look at the organization of society aspect that we talked about, whenever you have a huge kind of reorganization happening, there have to be big flows happening. Now, I'm not saying like stocks are going to go to zero. I just don't think they're going to like, reach all-time highs anytime soon because you just have these like, we're like late stage. We're like late stage in the cycle, in the fourth turning, whatever you want to call it. But the Fed cannot just cut rates because there's a little bit of a shake anymore because, you know, we already have too much debt. Inflation's out of control. Basically, like they can't spend money on interest rates and they can't save money. Like they can't really do much. They're just trying
stuck?
to. They're stuck and they're gonna be in like emergency mode where they're just trying to catch the falling plate. Like, okay, guys, like unemployment's falling off a cliff. We gotta do something. Oh, the bond market, we gotta do some QE. Okay, and like now inflation's too high. Let's try to. They're just they're in a bit of an impossible spot, and yeah, unfortunately, like risk assets, people are not going to be feeling very like risk positive. I think for the next at least 1-2 years is kind of what it feels like. Well, things can change, but and things like gold, Bitcoin, when you have so much international uncertainty and clashing, these like neutral shelling points are the basis for the next reorganization of society. Like you need to kind of go back to the fundamentals, and then you kind of build from there. So yeah, unfortunately, like we're back to back to the gold bricks. I don't know.
Yeah. And what's your like? I mean, Coinbase just put out this thing where, saying that we were in probably for a crypto winter. Do you think like the crypto cycle is over, or
No, I mean, I don't think the crypto cycle is over. Obviously, like the part of it that's just like extreme froth speculation is
Mm.
probably obviously over. I mean, the meme coin cycle is,
Yeah, but just
oh, they
maybe
can say whatever they want. Like,
just to step back here, like I think a lot of people I've talked to a lot of folks in the last like year, and a lot of people I think up until just recently were thinking that like there was like the early 2024 pop, right? Like the meme coin pop. And then there was like kind of AI and like the Trump top, and that we would have the mega top, right, where total market cap reaches like 10 trillion, right? And that kind of follows the cycle, like logarithmic curve, and that would happen, in like end of this year, early next year. uh
yeah,
I don't know if you subscribe to that idea up to
no,
up until recently, but like a lot of people in the space
never.
I think did. So
Yeah.
you don't think that, you never thought that would happen?
No, no, been telling people it's like astrology bullshit and that they should have sold in January. And I have a friend. He was like, but it's altcoin, it's the seasonality, the altcoin seasonality, and I managed to convince him to like sell a quarter or something. And of course, now he's like, I should have sold more. Um, no, there's none of that. I think like everyone's waiting for one last pump. That's kind of like the mantra right now. Is like one last pump, one last pump. Um, People are like, I've learned my lesson. Next time I'm getting out, I'll just give me that one last pump. Um, Look, I think Bitcoin is going to do very well. So I don't think the cycle's over in that regard. And insofar as digital assets as a whole do well, there's always going to be some extra money that flows into, like alternative digital currencies and assets. We haven't really seen like a good Bitcoin L2 thing happen yet,
Mm.
like a big success there. So maybe at some point we get that. We'll wait and see. I don't expect any astrology logarithmic cycle thing to come into play.
From this conversation, the takeaway is like start cycling into Bitcoin and maybe gold. Uh,
Yeah.
cool. Anything else you want to share, or any parting thoughts before we wrap up?
Yeah, I'm not generally pessimistic. I think once we get a lot more money in the digital world, we will start, having some of the other options and the other kind of ecosystem things start to play out well. But we're maybe a bit early. This feels like a reorganization phase.
Yeah. Jordi, thanks so much for coming on. It's been great chatting.
Oh, good to chat. Appreciate it. Cheers. Take care.